morning, everybody. Welcome to Casualty Connect, our video series featuring industry experts on the use of AI in the P&C insurance industry. Today, our distinguished guest speaker is Bill Burns. Hello, Bill. It's good to have you with us today.
Frank, good to see you. Thank you for having me.
Thank you, Bill, for being with us. You are the VP Research and Analytics of the MPL Association. You are also an actuary by training. You served as a Chief Actuary Officer of two MPL companies with more than 40 years of experience in the industry. So maybe to start, I would say smoothly today, Bill, would you mind sharing with us what you call data sharing, and why do you think data sharing is critical for med-mal insurance carriers today?
Well, Frank, let me take a step back and talk more holistically about data sharing within the property casualty industry. This is really the only industry I've ever worked in, so I can't speak to anything else. However, the first company I ever worked for actually exemplifies the issue of data sharing, and that would be Insurance Services Office, also known as ISO, which is now a subsidiary of Verisk. Now, ISO was set up more than 15 years ago as the combination of several rating bureaus at the time, and ISO's role was to standardize insurance rates. Now, think about that. They were setting prices back in the 70s. And they also served as a stat agent for companies because state regulatory bodies require companies to report data so that they can look at things like market share and profitability. Now we go through time, and ISO actually got away from setting rates, and they now set what they call advisory loss costs. They do this in many lines of business: commercial auto, personal auto. Most of the major lines come through ISO in some way. And the industry has been doing this for years, and in order to participate, you have to share some rather, I will call it, intimate data about your company: losses, premiums, exposures, expenses, and it all goes into the mix and comes out in the way of ISO products. And on top of that, they've also played a critical role in standardizing policy forms and rating plans. So I would posit that most companies today that are in more than one line of business actually use ISO somewhere along the line. And it's almost a gold standard, if you will, of, again, the policy forms and some of the language we use. Now, many of the MPL companies no longer report to ISO. They're not required to. But, in that context, our industry has typically been one of sharing. Now, for MPL purposes, there's two common databases I'm familiar with in medical professional liability. One is the National Practitioner Data Bank, and the other is the MPL Association's data sharing project. Now, they are distinct. They serve different purposes. The NPDB is you are required to report to that if a physician or a provider has a claim with any indemnity payments on it, any losses. If it's just an expense payment and the claim was tossed, you don't have to report it. The NPDB is mandatory. The DSP, the data sharing project that we manage, is voluntary. And I'd say about 15 of our member companies report loss data to the DSP. It's, again, voluntary, and they report all closed claims, not just those with a payment. So we see claims closed with no payment, which have always represented a vast majority of MPL claims. So these two databases are often used to look at trends in average severity by specialty. We are precluded from doing work on a state basis because some of our members are still the dominant carrier in their state. But the NPDB, again, I'm not exactly sure of all the details in the NPDB, but the DSP has been used for years by our members to look at average claim costs, to see kind of what the street value of a claim is, to see if they're in the neighborhood. It's been used for underwriting purposes. If companies want to see if a provider has had any claims, they can go to the DSP. If they want to see if there's trends developing in certain specialties, let's say back when laparoscopic surgeries were first coming into being, general surgery losses were going through the roof. And that was while the specialists were learning how to use the technology. So the problem we had, well, it's not a problem. This was by design, Frank. When the DSP was set up, it purposely omitted exposure data, i.e. the number of doctors, because the companies did not want this to ever be used for rate-making purposes. So the tool has stood the test of time. The DSP is, I think, 40 years old this year, and we have currently over 350,000 claims in the database. So again, there's data sharing from, say, an ISO perspective, and then there's data sharing within our industry.
All right. So you explained rightly the difference between mandatory program and optional or voluntary program. There are other programs on the market. How does data sharing give defense side insurers a competitive edge against a well-informed plaintiff bar? Many people have mentioned the fact that plaintiff attorneys share their data already. And so how do you think this will help the defense side also?
Well, again, as you mentioned earlier, I've been in the business a few decades at this point. And the problems we're seeing today are similar but different than what we've seen over the decades I've been in this business. And I'm gonna limit this to social inflation as a concrete issue, Frank, that I think companies on the other end of this video can relate to. We have talked, I remember 25 years ago, during the last hard market, the last crisis, we were talking about runaway jury awards. We were talking about monopoly money. But it generally was an insurance issue, a price issue. Companies had underpriced throughout the 90s. They realized they had underpriced. Now these large losses are coming in. The numerator's going up. The denominator had been dampened. So we had to raise prices. But we were able to do it. We came out of the crisis, I guess, a little stronger for it. And the two companies that I had worked for, they were two of the companies that didn't make it. They're sitting in the MedMal graveyard. But the problems seemed manageable. The issue of social inflation today is taking on a different meaning, a different value. Where now you're not talking about an insurance problem, you're talking about a problem that can jeopardize the delivery of healthcare. It can close down hospitals. It can wreak havoc with balance sheets. So, for the defense side, they might have a history of this in a small way. Any one defense firm might have a few of these types of verdicts sitting on their books that they've managed, that they've litigated. But what we're talking about is a much bigger problem. It's an industry problem. And so I think if we can find a way to share more information to give us more insight into those types of claims, then I think we're sending the defense attorneys out better armed. And the companies have a better chance of, precluding these runaway verdicts.
Right. So it is fair to say, though, that on the defense side, on our side, many companies, particularly MedMal insurance carriers, are expressing skepticism, if not concerns, about sharing data. And we have the experience at Optimalex, but I would like you to tell us more about those concerns and how we can respond to them.
Well, some of the concerns are legal. We do have antitrust issues we have to keep in mind. We can't tell each other what we're charging per se. So there are natural limitations on the data. Some of the decisions not to share certain data, it's the company making that decision. They've drawn a line in the sand. However, if you look, Frank, I'm willing to bet most all information within an insurance company is shared in some way. For example, a company goes out to buy reinsurance. They have to put together with their broker a reinsurance submission. That submission contains some fairly sensitive information, exposure data, pricing data, large claim data, and that information is needed by the reinsurance market in order to come up with a price for whatever cover the company is willing to buy or looking to buy. You also have your auditors. The auditors basically have, in some ways, carte blanche to go in and ask for data. They will look at exposure data and large claim data, et cetera, similar to what I just said about the reinsurance brokers. So, but some of the companies don't see the need to share that data beyond when they have to in a commercial relationship like they have with their brokers or their auditors. So again, Frank, some of it is a mindset that the companies, for competitive reasons, don't see a need to share this data beyond their walls. So, as I said, there's this bit of a dichotomy where the data is, and think about reinsurance. Your broker will take the submission to the market and provide it to reinsurers that may never be on your program. So you have companies with whom you don't even have a working relationship that have your data that could be building a treasure trove of all these submissions they get so they can look at trends, they can look at opportunities out there. So, it's a philosophy, Frank. It's a habit in some ways. But I do think we are realizing more, we as a society, that more data is probably better. And even if you are X% of the market, that still leaves 100 minus X% that you don't know anything about. So I can only see we're having more or all of that data gives us better insights and leads to ideally better outcomes.
So maybe it's better to say that they may have concern not on the data themselves, they should be concerned with whom they share the data. And when there is a third party of trust, which is the case of the MPL association, Optimalex, for instance, is doing the same. Of course, it's purely voluntary, but we never share, an MPL association the same. We never share individual competitive data. We agglomerate the data. We can share the
Correct.
knowledge, but any individual data is kept secret and private, right?
Yes.
The whole point is to make a federative learning out of this data, not really to share the data itself. So let's be, again, skeptical. I am the leader on the market. I am the co-leader on the market in the US. Why would I even consider sharing my data instead of going alone?
Well, when we say data, we're not talking all the data. We never are. We're talking about subsets of data. And so I understand there is a tension, a balance between information you are willing to share in some way. There's information you may have to share, back to the reinsurance brokers. There's information you have to share the NPDB. There's information you might want to share, such as the DSP. But I think we have to look at this in total and say, okay, what is the mission? And I won't speak for any company. I'll speak as an outsider in this case. Before our call, I looked up the mission statement of half a dozen MPL companies. And they are largely there, and I'm paraphrasing, to protect and defend the practice of medicine. However, embedded in their mission statements is also the reference to patient safety. And so if the data can be used to enhance patient safety, in an ideal world, med mal companies wouldn't need to exist. I'm being altruistic because we figured out where all the problems come from, and we never have any misadventures. We're never going to get there, but if you can provide more data as an industry, and that can provide better insights even to the largest of companies, then I would say let's think about it at the very least. What would those data elements need to be? How do we protect the confidentiality to keep it anonymized? But let's at least have the discussion. And that's something ISO has done very well over the last 50 years, is figure out how to keep the data anonymous, and yet every company that wants to can benefit from it.
Exactly. So it's obvious for smaller companies, but even larger companies, what does it mean really to be the leader? As my premise was, I'm the leader in my market. I may be the leader overall in the US and still not being the leader in this jurisdiction or that jurisdiction in
Yes,
this
sir.
specialty or that specialty, and so on and so forth. So everybody win in sharing data and knowledge, not only the smaller companies. Yeah, thank you. I think
Yes, agreed.
this is very convincing indeed. So now let's go into more concrete, tangible benefits. What tangible benefits have carriers seen from your experience in participating in data sharing programs?
Well, I'll speak to what I know. A company wants to expand into, let's say an MPL company wants to expand into commercial auto. They're insuring a number of hospitals or facilities that have either owned or non-owned auto exposure. Well, even if they're the largest in their state or the largest in their region or even in the country, they may not have any commercial auto experience. So they have a couple of options. One, and you think about the irony of this in our industry, I can sit there and wait until your company, Frank, creates a product, creates a ratings plan, and submits it, and all I have to do is say, me too. And I just copy what you've done, and that's perfectly legal. You've put in all the research and development, you've hired the people, and all I have to do is send a me too letter. But if I want to get into this line of business, I don't know where you even start. So I would look for advisory loss costs from ISO in this case. I'll keep it simple, limited to ISO. So I would subscribe to ISO. I would get a rating, I would get a loss cost circular from them for that state. They would tell me which companies make up that data so I can see how much market share, how much credibility I want to give it. And now it's up to me to figure out, okay, what would my expense load have to be on top of this for me to now make a profit? It's kind of that irony of it that even if you are the biggest, there it doesn't mean you're big in everything everywhere, as you said. So you will have to default. What does a policy form look like? Let's look at the ISO form. Let's look at the form of the largest carrier in that state, which I can find online, and I can just say, put my name on it because I'm going to me too the product, the policy itself. So, we're already doing it, Frank. We just have drawn lines in the sand that we individual companies are not willing to go past.
That's right. Thank you, Bill. So maybe as a conclusion, let's speak about the future. And what do you suggest as concrete next steps for carriers looking to get started? Now, let's assume they pass the skepticism or any legitimate concern, and they really are bullish about getting started. What should they start to do in terms of data sharing?
Well, if we start at one end of the spectrum, Frank, where companies really have no experience in the business or in a state, they're going to have to look for some benchmarking to get started. And again, that's where you can go to a rate filing, even an old one, and you can adjust it to bring it up to today's dollars. But I think what we should do is to make this more meaningful is think about a problem. I brought up social inflation earlier as a problem. But even that problem is not affecting all segments equally. It's affecting the hospital segment more than the doctors. It's affecting the facilities more than the other professionals. So I think what we would have to do is say, okay, what is a problem? Reach out to the industry, the people on the street in the arena, and say, what problems are you having that a common effort could help mitigate? And so I never want to presume to know what companies are up against because I'm not a chief actuary anymore. I'm not a line underwriter. But the industry has to come up with what the most impactful problem is, and then maybe we can figure out a way to combine data. And it doesn't have to be just insurance data. You and I have talked about this. It could be healthcare data. It could be not just med mal data. It could also be commercial auto and general liability data, because this isn't just a med mal issue. So, but I think having the discussion with the interested parties to see what is the problem, decide what it will take to maybe fix it or mitigate it, then say, this is what we're going to need. And if they're willing to do it or not willing to do it, at least we'll know at that point.
Yes, I think for full disclosure, we should also say that this is by no means a revolution because many other industries have been doing that for years. And
Yes.
to be honest, some in some insurance carriers in the med-mal space are starting doing it. So we are observing a change in the mindset. It's a long and not easy path, but
Yes.
some people, after your evangelism, have started to join the program, of course, a long time ago with the MPL, with Optimalex and others. Thank you very much, Bill. I would like really to thank you on behalf of our audience. This was our guest speaker, Bill Burns, in Casualty Connect, our video series about the use of AI in the P&C industry. And I'm Frank Giaoui, co-founder and CEO of Optimalex. Thank you and see you soon. Bye-bye.
Take care, Frank.